2014 has been quite the bullish year for stocks. The Dow broke record highs when it surpassed 17,000 points in early July, and the S&P 500 hasn't been doing too bad either. And believe it or not, the month of July has brought the most IPO filings since the dot-com bubble 14 years ago. Which soared and which sank? Here are 5 of the best and worst IPOs of 2014 so far. Let's start with this year's IPO champions. At number 1, Grubhub. After the merger between Grubhub and Seamless last year, market watchers were excited to see where the online food delivery service company would go once its stock went public. The company did not disappoint. As of late July, Grubhub investors have feasted on a 40% total return from its offer price of $26. Number 2, El Pollo Loco. This California-based fast food chain, El Pollo Loco, decided to take its crazy chickens to market in late July, much to the benefit of shareholders. The company saw shares gain 60% on its first day of trading alone. The total return from the offer price of $15 just a week after launch is already at 130%. But there's a catch. The company lost $54 million over the last 3 years, so it'll have to use its IPO gains to pay off some serious debt before it can expand further. Number 3, GoPro. In late June, the digital camera maker GoPro took its shares public and watched their price skyrocket with a total return of more than 90%. After signing content deals with tech giants Microsoft and Google, and now with a market cap of almost $6 billion, GoPro is on an action-packed ride of its own. And now for the flops. King Digital started a mobile frenzy with its popular Candy Crush gaming app, but the company was crushed itself by markets after its IPO had a subpar first week of trading in March. Despite its initial valuation of over $7 billion, the tech company's total return is now negative 14%. It might be that this king may have to turn over its throne. And last of all, Viggle. The mobile television app Viggle is among one of the worst performing new stocks of 2014. Viggle's stock price fell 28% on its first day of trading back in April. It could be that Viggle's launch was poorly timed, or that the market for mobile TV apps is just too crowded already. But either way, Viggle has to figure out how to get investors to tune back in. That's all for this week. For more 5 things, visit fortune.com.